Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with the Rocks and Stocks News Show. This is one of my In the News where I talk about companies that have made some news, and I've got about a handful to talk about today, or a half a dozen, I think. So we'll get right to it. Discovery Silver had news out of they reported 50,000 ounces of gold production, $27 million of free cash flow in the second quarter of 2025. So, some of the highlights, they talk about their transformational quarter as they purchased the Porcupine Complex on April the 15th. They finalized a financing package to acquire that from Newmont. They had net earnings. I'm not going to go too much into the details about the quarter, simply because I think they only had about 74 days of owning the assets, the Porcupine Complex. So it's not a full quarter, but that's more of what I want to talk about. So let's look at some of the highlights. So 50,000 ounces from April 16th to June the 30th. Uh, Operating cash costs. Here's the one. All-in sustaining cost average 2,100 sold versus average realized gold price of 3,300, and all-in sustaining cost averaged $1,872 of an ounce sold. They go on, strong cash flow, solid position to support operation and growth plans. So that's another important part that I'm going to touch on. Tony McCooch, who's the CEO, stated, and I quote, Q2 2025 was Discovery's first quarter as a Canadian gold producer. During the quarter, we integrated systems, strengthened management structures, and began implementing investment programs at Porcupine aimed at improving existing operations and pursuing growth opportunities. It was a significant challenge, and I want to thank our team for delivering a quarter of excellent progress. We also turned in a solid quarter of operating and financial performance, producing 552 ounces in the 76 days that we own the asset. Gold sales of 42,550 ounces were below gold produced, with the gold inventory at quarter end to be sold during Q3 2025. So they got some more ounces there. Oh, I'll continue with the quote, sorry. Net cash from operations totaled 67.1 million, while free cash flow was 27.3 million. Adjusted net earnings totaled 28.4 million or 4 cents a share. Key investment programs initiated during Q2 2025 included investments at Dome Mill, mainly in the crushing, grinding, and carbon handling circuits, advancing work at the Dome tailings management area, continuing to ramp up Pamour with pre-stripping and production levels meeting target levels, and commencing investments at Hoyle Pond and Borden to optimize and grow operations. We also began deploying drills as part of an extensive exploration program targeting numerous near mine and district targets at Hoyle Pond, Borden, and Pamour, and supporting the evaluation of high potential new sources of production, including the TVZ zone and the resumption of mining at Dome Mine. Looking ahead, we are targeting production levels to increase in the final two quarters of the year. We also plan to ramp up our capital investment and exploration programs as we move forward with our growth and value creation plans for Porcupine. You can see all the data from that. I'm not going to go into that. You can read that in their news release. But some of the big picture things I wanted to talk about is the that the company has owned this asset that they bought from Newmont for only 76 days of that quarter. And so they, they got to keep working to get that up to a full quarter. Now, oftentimes when you're in a situation like a takeover like this or an asset purchase like this, it takes the analysts on the street a couple quarters of full production to really start to wrap their heads around the financial situation. Now, they bought this project from Newmont, and for Newmont, it was a non-core asset, non-core mines. For Discovery Silver, this is a company building assets that are, as they say, transformational. Now, other things that they're working on, Tony McCooch mentioned in his quote, and that is moving to increase the production and also fine tune the operations under their guidance or management. And so I think this is a fantastic acquisition, and I think it will be transformational for the company. Let's take a look at their stock. So what happened was, as you can see, they were trading at around, let's say, a dollar average for several months prior to the acquisition. And since then, they've been a rock star. They're up to 397 on the close today. The stock went through an important golden cross here, has spent most of that time above the 50-day moving average, traded along it for a little bit there, and has recently broken out above it. And so, unfortunately, I had been looking at this company primarily because Tony McCooch is such a talented guy, and he built Kirkland Lake into a huge success story, and they were kind of struggling down in Mexico to get the permits they wanted, and then they announced this transformational deal, and stock got away on me, and I just I didn't have a chance to pull the trigger. But I wanted to use it as an example today of how a company can go through a transformational event due to mergers and acquisitions. In this case, it was an acquisition of the non-core or one of the non-core assets that Newmont was selling. And for Newmont, it's non-core, but as I said earlier, for a company like Discovery Silver, it's a transformational asset that is a company building asset. And another key thing that Tony talked about is their exploration to enhance these assets. And so collectively, I think it's a good example of how mergers and acquisitions can be transformational. And I certainly believe that they have a transformational asset. And congratulations to them on that acquisition and how they're dealing with it, because you really have a tremendous person in Tony McCooch, and who surrounds himself with really good people running the projects now, enhancing them. And yeah, it's been a wonderful situation for the shareholders as well. All right. Next company is Equinox. Equinox is a company that I have covered in past. It is currently not one of my picks, but they had their second quarter numbers out, and I wanted to go over those. So Equinox Gold delivered their solid second quarter, poised for major inflection in Q3 2025, including Calibre asset production, Canadian Greenstone Gold Mine ramp up, and Valentine Gold Mine startup. So they talk about the unaudited, condensed, consolidated financial statements. Darren Hall, who's the CEO of Equinox, commented, and I quote, Equinox Gold is entering a pivotal growth phase. Q2 delivered solid results led by Greenstone, where mining rates increased 23% and processing rates improved 20% over Q1. Building on that momentum, Q3 is off to a strong start with quarter to date ex-pit mining volumes 10% higher than Q2 and process plant throughput averaging 24.5 thousand tons per day over the last 30 days, including more than one-third of the days above nameplate capacity of 27,000 tons per day. This sets the stage for our true inflection point in Q3, driven by a full quarter contribution from the Calibre assets, first ore processed at Valentine, and continued improvement at Greenstone. If the Calibre transaction had been effective from January 1st, 2025, our pro forma consolidated revenue for the first half would have been approximately 1.33 billion, highlighting the enhanced scale and earnings power of the combined company. We expect a strong second half of the year with production on track to meet our full year consolidated guidance of 785,000 to 915,000 ounces and anticipate continued growth in both production and cash flow into 2026. Our focus is clear as we grow into a top tier producer, operational excellence, disciplined capital allocation, and deliver on our commitments to drive debt reduction, optimize our balance sheet, and maximize returns for shareholders. End quote. So, some of the things that stand out to me from this quote is that they are moving towards full commercial production at Greenstone. It has had some challenges along the way to getting to full commercial production. Darren Hall is the new CEO of the company, and they're getting on top of those challenges. Those challenges is why I have not made them a pick in the report as of yet, but I am monitoring their progress, and I see some really encouraging stuff in there, such as moving towards nameplate capacity, and especially moving towards that 785 to 915,000 ounces of production. I believe that they are talking about 1 million ounces of production as they fully integrate the Calibre acquisition, which is another event that takes a little bit of integration to get the two companies together. Some of the highlights from Q2 2025 and subsequent events. On June 17th, they closed the Calibre mining acquisition, produced 219,000 ounces of gold, including full period contributions of 72,000 ounces of gold from the Nicaragua operations and Pan mine, excluding 1,975 ounces from Castle Mountain and 1,495 ounces from Los Filos. Total cash costs of 1,478 per ounce and all-in sustaining costs of 1959 per ounce. As they get Greenstone into full commercial production and Valentine Lake, they expect that all-in sustaining cost to drop quite dramatically. Cash flow from operations before changes in non-cash working capital of 126 million. Mine site free cash flow of 154 million. Income from operations of 159 million. Net income of 23.8 million or 5 cents per share. Uh, Sustaining expenditures of 71 million, non-sustaining expenditures of 42 million. So they're spending money as they're bringing everything into full commercial production. Cash and cash equivalents of 406 million at June 30th, 2025. Net debt of 1.37 billion at June 30th. So that net debt is the cost of acquiring, well, part of it is the cost of acquiring Calibre Mining. One of their big goals is to get that net debt down. And so, they've got a healthy amount of cash relative to their net debt. So as they bring Greenstone into full commercial production, get Valentine Lake into full commercial production, that's when they'll really be able to make a dent in that net debt. Castle Mountain designated as this changed actually just today or yesterday. They announced that they've been accepted into the FAST program, and you should read that news release. Uh, they're selling their non-core Nevada assets for 115 million, so that will add to their cash. Valentine Gold enters the final stages, Valentine Gold Mine enters the final stages of commissioning with ore processing expected to commence before the end of August 2025, so right this month, followed by the first gold pour approximately 1 month later. So that would be into October, and then they'll keep ramping that up. On June 30th, Equinox ratified the new long-term land access agreement with Mescala and Chochipala, two of the three communities near Los Azules mine. These agreements enable a new mine development project starting with an exploration program in Q3 2025 and followed by engineering studies to evaluate alternative locations for the carbon in leach plant needed for potential expansion. This one's been a bit of a bugaboo for them in that Los Filos could be a great mine, but they've had some problems with one of the three communities. They have two of the three on side, so they're looking at plans to alleviate that issue. Senior leadership change transition as Darren Hall was appointed Chief Executive Officer and Director. So he's taken the reins of the company. So yeah, all in all, they're really making very good progress, and they've had some hurdles, as I said earlier, at the Greenstone Gold Mine. But I think that Darren Hall and his team will get on top of that because they're very good operators. And then they're also moving forward on the Valentine Lake or Valentine Gold Mine startup. So yeah, I'm monitoring things really closely with Equinox. I haven't made them a pick as of yet in my current list of picks. I do like what I see as far as the various developments that are ongoing, and monitoring making them a pick in the not too distant future. All right, next company is, oh, before I go into the next company, let's have a quick look at the Equinox stock. This is the Toronto listing. And as you can see, it's been kind of a bumpy ride. They had a good run when they announced that they were going to take over Calibre. It kind of went sideways for a number of months. More sideways action. It bottomed out here recently in July and has been improving since then. I like to see that. Looks like the 50-day moving average is flattening. And with stronger gold prices and the fundamentals that they're working on, I can see this one, this 50-day moving average improving. And so, that would require that their stock price goes up from here. And so, with the fundamentals and the improving price of gold, I think that that's a doable sort of situation. So there's the Equinox story. Now I'm going to move on to Nuvau Minerals. I'm a shareholder of this company, and Nuvau launches follow-up drilling to Bracemac footwall gold discovery in Matagami. Let's pull up their stock chart. So let's see, just hold on a second here. So they really had a big run here when they announced that they had found a vein near the Bracemac VMS base metal mine. They're still awaiting the assays from that, but there was good optimism due to that first gold hole that hit a quartz vein and had significant, substantial visible gold in that vein. So, oh, sorry, here we go. And so now they're talking about this following up on that. They've begun a minimum of 1,500-meter drill program aimed at testing continuity and extensions to the orogenic gold system discovered last month. The discovery was made with the first hole drilled of an inaugural gold-focused exploration program in the footwall of the Bracemac McLeod mine, approximately 200 meters below surface. The follow-up program is being drilled immediately northeast of this base metal mine, which was in production until mid-2022. The Matagami property is in the northern Abitibi region of Quebec, one of the world's most prolific gold endowed districts. This northern part of the Abitibi region includes Canada's largest gold producing mine with the country's largest gold mineral reserves. The Detour Lake mine, owned by Agnico Eagle Mines, Hecla Mining Company's Casa Berardi mine, which has produced over 3 million ounces of gold, is located to the southwest of the Matagami property. While the Abitibi's first recorded gold discovery was 119 years ago in Rouyn-Noranda, the Matagami property remains one of the largest areas in the region that has not been subject to a gold-focused exploration program. Previous owners were concentrating on defining and developing multiple VMS deposits into multiple mines that produced extensive copper and zinc for more than 60 years. This was one of the primary opportunities Nuvau identified when it entered into the agreement to acquire the property from Glencore. The company recently began compiling gold-related historical data as well as launching several gold-focused initiatives, including till sampling aimed at defining initial drill targets for drilling. Here is the claim map, which is 1,300 square kilometers. The Nuvau's current gold-focused exploration program has identified three initial priority targets: Bracemac footwall discovery, gold and till anomaly target, and the Thunder mine target. Here you can see the three zones that they're talking about. This is where they have the gold in till anomaly target. Uh, two is the N2 is the Golden Till. I think they've got Golden Till up here as well. Nuvau Gold Till anomaly here, and the Thunder Mine gold target up there. Then down here is where they have this new discovery. They talk about details of that. So here is the Bracemac McLeod underground workings, and their drilling was just outside of that into the vein that they've intersected. And I think they're tentatively modeling it as in this direction. So they've got to do, they're doing uh, a long strike and up dip from the initial discovery. And here is examples of the visible gold with the naked eye at the new discovery. It's quite impressive stuff. You can see really some beautiful examples of visible gold. They talk about their golden till anomaly. I'm very excited about this. Look at all of that visible, or all of those grains of gold, and you can note that a lot of these are angular. When a gold grain moves a long distance from the source, from glacial movement, they get rounded. And when they're angular like this, it suggests a close source to that. They're called pristine grains, and they have a lot of them. So, that's pretty exciting to see all of that. They talk about their Thunder Mine target and some of the historical drilling that was done back in 1988, I believe. 26 grams, 78 grams. These are your classic intersections and grades that you'll see in an orogenic gold system. And here they give you some more details about that. So yeah, really good news from Nuvau on this plan to take a project that was focused for 60 years on VMS. It's a very large 1,300 square kilometer project. It was in production recently by I always forget their Glencore, sorry, and Glencore was only focused on base metals. They didn't care about the gold potential, but you're in one of the greatest gold districts in the world at the Abitibi. And so this is a ideal place to be looking for gold, as well as efforts to bring the base metals back into production. So they have quite a compelling story on both the gold and the base metals of gold, copper and zinc. And I think they've got a very bright future ahead of them for both those endeavors. I'm really excited about this new discovery and anxiously awaiting the assay results. I'm quite optimistic based on, the amount of visible gold in that sample. So stay tuned for more news from Nuvau Minerals. Alrighty, now I'm going to move to the next company, which is Argenta Silver. This is a new pick of mine in the reports over the last few weeks, actually. And just earlier today, they announced that Argenta Silver Corp drills 1,026 grams per ton of silver over 40 meters, including 18,467 grams per ton of silver over 1.05 meters. Now, generally speaking, in an epithermal vein system, the veins tend to be, a meter to 5 meters. And, here in Mexico, where there's a lot of epithermal vein mines, the grade, let's say, averages about 400 grams per ton of silver. Now, considering that your costs are so low here, they make for fabulous mines. So, using that as a background, when you start to see 1,000 grams of silver over 43 meters or 18,000 grams over 105 meters, that's pretty spectacular stuff. They talk about second batch of assay results from their ongoing 2025 Winter Diamond Drill program at their 100% owned El Kivar project in Salta province of Argentina. They some of the highlights, as they state in the headline, are these results here that I already mentioned. I didn't mention this, including 2,246 grams per ton of silver over 15 meters, which includes 4,423 grams of silver over 6 meters. And notice that I'm not calling this silver equivalent. This is all silver, folks. Their 413 hole had 414 grams of gold over 14.35 meters. Another spectacular intersection, including 795 grams of gold over 3 meters and 466 grams over 4 meters, which was expanding the up-dip potential of the existing resource. So not only do they have an existing resource of about 50 million tons that remains open, they've drilled above that and hit those grades. That's quite impressive. Their hole 411 was halted at 92 meters due to operational challenges. The target remains in the program and will be drilled after other priority areas are completed. Joaquin Marias, who's the CEO, president, and director of Argenta Silver, commented, and I quote, from a technical standpoint, the extraordinary tenor of the XG mineralization highlights the strength and scale of the hydrothermal system that formed El Kivar. The success of the up-dip drill hole QVD 413, along with the project's highest ever assay, 18,467 grams per ton of silver over 1.05 meters within a broader interval of 1,026 grams per ton of silver over 40 meters in QVD 412 validates and reinforces our dual strategy, expanding the known resource while aggressively exploring the vast untested areas of this high grade system. End quote. And that is certainly not an understatement to say a high grade system. In fact, some in the industry would call these bonanza grades. I know the regulatory bodies don't like that term bonanza grade, but when you come out with these kind of grades, I really, what else can you call it? Extreme high grade? So I'll live with my angering the regulatory bodies. They talked about drilling kicked off in late May as a fully funded 4,000-meter winter program to confirm high-grade zones, step out along strike, and test new targets. Assays from the first group of results were announced on July the 21st, which is, I made them a pick after that. The exploration program still ongoing, and results from the remaining holes are expected by early and late September. So as you can see, they've been drilling a lot of holes here in and around the known resource, but they have plans, you can see in yellow, of where they're looking for new discoveries as well. That combination is very exciting. Now, this outlines the resource of 50 million tons. And they think it's open in this direction and this direction. Now, although this is called a infill hole, it's infilling in an area that is under drilled and needs a lot more drilling. But nonetheless, look at these grades that they're getting. That just expands and makes this zone over here very exciting. Now, I'm sure that they'll follow the plunge of this and get even more drilling because, after you get to here, there's really nothing over here. And, this thing is plunging in that direction. So that's very exciting. Here is an infill hole. But when you're infilling it with this kind of grade, that can really help the resource calculation. Here is another hole with at 410 with very good results, 409 with great results, 408. And this is it could be a dome kind of situation where this vein continues way over here off the page, off the image, and they certainly are getting good grades there to suggest that they can extend it over there. So there's a whole bunch more detail. Oh, this one's interesting because 413. Let me go back to this map. 413. This is a step out beyond the resource, and they've separated it and highlighted it because they've got this gray background area is where the part of the resource comes from. But look at this beautiful hit over here of 14 meters of 414 grams. That's some really juicy looking stuff, and it's outside of the resource. So, they're talking about it being open over in this direction. It wouldn't shock me to see that this one continues to be open over in here as well. So yeah, lots of room to grow that portion of the resource. And having said all that, the resource current sits at about 50,000 million ounces, 50 million ounces of silver. And sort of one of the rules of thumb in these kind of systems is the the getting to a point of having critical mass is at about 100 million ounces. And that the basics of that are that would give you about 10 million ounces of production over a 10-year mine life. And so to get to that threshold means growing the resource. And based on the drilling that they're currently doing on the known resource and extending that and how open it is, I certainly believe that they can get to that threshold and just on what is sort of known already from the resource area. But then they've got lots of these epithermal veins come in clusters. Where you find one, you usually find many. So it's wide open to make new discoveries as well. Both uh, are including blind veins. And in these epithermal vein systems, sometimes those blind veins can be quite exceptional as well. And I'll show you why that is, actually. This map can help you. So, although the deposit outcrops up here, sometimes they can be more like this, where they don't actually come to surface. And had they not had this portion, and it was one of these big blind veins, look at all that material that they would be open. And so I think they got a great potential to find blind veins as well. And so that's quite an exciting prospect. Let's go to their stock chart. AGAG is their symbol. And as you can see, they've only been trading since November of last year. And in that time frame, they have created quite an impressive cup formation. Now, oftentimes, and I think that they have a cup here, the left side, the bottom, and the right side, as well as a mild handle, oftentimes, like when I'm looking at cup and handle, I look at the left side of the handle or cup to give me an indication of how long the candle will be in a cup and handle. So I've got my cursor here, creating a bullseye sort of so you can see the lines. See the left side of that? It was at about 44 and a half cents. 40, let's say 45. And the top of the right side of the cup was above that. When I see a stock go above when it's going up the right side and it goes above the left side, I find this to be very bullish. And what it usually means is that the handle will not last for very long, and then you'll see the next upwards trend. And this is sort of a classic example of it, where it exceeded the left side of the cup on the right when it moved up the right side significantly. And then the consolidation after that was very short-lived and mild, and now it's on another rally. So I really like what I'm seeing from both the rocks and the stock trends. And Argenta, I love high-grade silver epithermal vein systems, and that's what they have here. And so I like what I see with Argenta. Orla Mining, this is one of my favorite mid-tiers picks. And they talk about reaching a major milestone in Nevada with notice of intent for their South Railroad project. So as it sits now, they're producing gold in Mexico at their Camino Rojo project. Then they bought the Musselwhite project from Newmont when Newmont was selling off their non-core assets. And this is the third leg of the stool, if you will, which is their South Railroad project in Nevada. That would give them production, gold mining in Mexico, Canada, and Nevada, making them for them to be a real North American mining company. So what they talked about, company working with cooperating agencies to fast track timeline to construction. Company work. Then they talk about announcing that the U.S. Department of Interior Bureau of Land Management, known as the BLM, has published the notice of intent for the South Railroad project in the Federal Register. South Railroad is located in Nevada and forms part of the company's large South Carlin Complex land package located on the prolific Carlin Trend. They have a quote in here from Jason Simpson, who's the president and CEO, and he stated, and I quote, "The publication of the notice of intent marks a significant milestone for our South Railroad project, continuing the process towards receipt of final permits. South Railroad is the next pillar in Orla's organic growth strategy toward annual gold production of 500,000 ounces. We thank the BLM, the Secretary of the Interior, Burgum, and the U.S. administration for their continued support of American mineral development and production. We will work with our cooperating agencies to fast track the timeline to on-site construction start and ultimately first gold production," end quote. So they talk about the South Railroad, 100% owned, low complexity, feasibility stage heap leach project. That would be another of their low cost producing mines. And that's one of the key reasons why I like Orla, is because they're a mid-tier producer, and they're moving towards a 500,000 ounces of annual production, and they will be a low-cost producer. That combination puts them in a very good position, and why I have them as one of only two of my mid-tier picks. Let's take a look at their stock right now. Sorry, Orla. Oh, there we go. I'll pull up the Toronto listing. And as you can see, since early 2020 or late 2023, they bottomed at about $3.51 back then. They're currently trading at $13.38. A lot of this movement was due to the acquisition of the Musselwhite project from Newmont. And when a company does something like that kind of an acquisition, although it was non-core for Newmont, one of the world's largest gold mining companies, it is a company building asset for a company the size of Orla. And so that was a really important fundamental thing. And then, of course, they've got their Camino Rojo project. They're having good success at bringing drilling below the oxide open pit to get underground and mine the sulfides there. And now they got really good news on their third pillar, which is their South Railroad project. And so collectively, they've got a very good combination of assets. And yeah, I'm happy to have them as my one of only two mid tiers that I pick in my reports. And I really like their pipeline and how they can enhance their current mines. And so, yeah, collectively, that makes for a very good combination. And then when you consider that I believe that gold is going a lot higher, that only enhances the bottom line for all of their operations. So that's the Orla story. Next up is West Red Lake Gold Mines. This is not a pick of mine, but they had some very good news out that I wanted to talk about today. It came out yesterday. The headline is West Red Lake Gold expands high grade zone in South Austin with 36.85 grams per ton of gold over 6.9 meters, 92.39 grams per ton of gold over 2 meters, and 8.79 grams per ton of gold over 15.5 meters. They talk about this reporting drill results from their 100% Madsen mine, located in the Red Lake Gold District of northwestern Ontario. Their CEO, Shane Williams, president and CEO, stated in a quote, "The high-grade panel of gold mineralization the team is currently defining and expanding in South Austin has been delivering exceptional grades and thicknesses. Archean lode gold vein systems like Madsen are well known for having pockets of mineralization that are often discrete, very high grade, and require tight spaced drilling to properly define. The success we are having in South Austin with the underground definition program underscores the importance of getting the drill deeper in the system and into the high priority areas of the deposit so that additional high grade pockets and lenses can be discovered, drilled off, and integrated into the mine plan." End quote. So what he is describing, there's some in the mining business call those jewelry boxes. Okay. These are pockets inside of an overall deposit that can be highly profitable. Red Lake, Ontario, and the Red Lake mine that made Goldcorp famous also had this kind of a scenario. And so I wanted to show you this map because it shows you the underground workings in green here. You can't see them hidden behind here. That's the McVeigh zone area. Up here is the North Austin. And over here is the main Austin deposit. Some of this has been mined, but a lot of it is still open. Not much of South Austin has been mined, and the pure gold had this mine before and failed, partially because they hadn't drilled it off enough, but they were just starting to get into this South Austin, and it probably would have turned the project around for them, and then West Red Lake Gold would not have got this mine. But as you can see, these black lines are high density of drilling to drill off these jewelry boxes that I call them, and South Austin. And I think once they get down to this, things could really open up at this South Austin, because the mining was only into some of this patchy area up here and over here. They didn't get down into this juicy stuff. And obviously, they think that there's a lot more juicy stuff in this immediate area where it's got these red hatched lines. And yeah, they're getting really good success with that drilling. A lot of high grade in there, 36.85 grams over 6.9 meters. A subinterval in there included 3 meters of 81 grams. Uh, Another hole had 2 meters of 92.39 grams. Included in that was 1 meter of 183 grams. So these are jewelry box bonanza grades that can make for very profitable mining. But what you have to do to make that profitable mining happen is you need to do this tight spacing of your drilling holes so you know exactly where to mine that precisely. Because you don't want to be mining waste and diluting the grade and diluting the profitability. So doing this tight spacing, just looking at, you can see where they're drilling, and that tells you a lot about what they think can deliver a lot more of this super high grade that they can mine very profitably. Um, There is some of the visible gold from recent drilling in these red circles. You can see it here. Another hole, you can see more visible gold in these red circles. More visible gold. Wow, that's a really impressive piece of visible gold right in the quartz and outside the quartz a little bit. Impressive looking stuff there. More visible gold, more visible gold, some nice chunky visible gold. That's what gets you those very high grades. Another nice occurrence of a cluster of visible gold here and here in hole 003. There they give you the table with all the high grade. They're just drilling up a storm here at their Madsen mine. And yeah, that's the drilling results. Now, let's take a look at their stock before I close. So this is sort of the action as they've started getting into production. They've got more work to do to get it up to full commercial production. And it's sort of rallying of late. I think that the catalysts to move this up from here will be getting this back into full commercial production and more great drill results like they're doing now. And of course, if gold continues to move higher, like I think it is going to, that also helps out things. So yeah, it's a good combination. I'm getting pretty close to making this an official pick. And yeah, that's the story there. I'll stop sharing now. and close things off. So, as always, my shows are for information purposes only. It's important for you to speak with your financial advisors before making any investment decisions and do your homework. When I do these shows, I'm kind of trying to give you a leg up on doing that homework. And I use my 32 plus years of experience in the mining business, primarily in exploration, to give you my insights into what stands out to me from their news releases. But that's just a leg up, folks. It's important for you to do your own homework. And part of the reason why I am always advising people to do their homework is it's important for you to understand and really get a grasp on the companies that you own shares in. That makes you a shareholder, not a share renter. And another important reason why you want to be a well-informed shareholder is because I find a lot of investors in not just in the mining sector, but in all sectors can make investment decisions based on emotions more than logic and reasoning. And to do the latter and not the former, it really requires you to be well informed. And so that's what I'm all about, what I do, why I do my shows, why I have things like my WhatsApp group for Rocks and Stocks News, is to help inform people and give you ideas on what I see. But ultimately, it's important for you to know what you invest in and why you're invested in that. And ultimately, the goal is to be a well-informed shareholder that makes investment decisions based on logic and facts and not emotions. Okay? So there is my disclaimer and advice to do your homework. Have a great day, and we will talk to you soon.